I want to see. No sound yet. Okay. Can you hear me now?
Yeah, I can hear you now. It's great. I can hear you. Cool.
Okay, so you can hear me now. So we are all set, right?
Yeah,
So
no worries.
I would, I'm trying to record it out here also at my end, but would appreciate if somebody can do another recording on their end. If somebody can do that, just in case if I miss it out. I hope this is recording. So I'm just going to carry on. Uh, before I do, before I do, if somebody can just send me another message that you can see my screen and you can hear me. Okay, all Lauren. Thank you, dear. Thank you, David. Thank you, David. Yes, you can see. All right, so we all set to go. All right. As I mentioned, what I intend to do today is that show you a little bit of how to work with trend lines and at the same time the impact they carry and what is the most optimum or efficient way to go and carry on working with the trend lines. Uh, Brief about myself, I've been proactive with the trend lines for about 12, 13 years. I consider myself still in a learning phase because I think working with Trendline is, in depth and still needs to be exploited. I probably know about 4 or 5% of, the true strength of or how you can utilize Trendline into your trading purposes. So I'm not there yet, but day by day I'm progressing. Every day I learn something new, and the only hint I can give you is that once you start working with Trendline, or those of you who are actually working with a Trendline, it's about history repeating itself into patterns, into price action, however you perceive it. You just need to start registering it in some of the trend line that comes in and plays your way. You just need to start focusing on them. Back testing may not be going and trading them live, but then see how they come when they come into effect, how they react with the price action and what you can do, whether you want to scalp with them, whether you want to go intraday or swings or hold on for a longer stretch. It's all applicable. What I'll demonstrate today is how you go from scalps, ultra short term to moderately short term to maybe intraday to even a higher projection. Got about an hour to do, so I'll see how best I can fit my time and carry on. But before I start doing that, I'm just gonna take you down on with the dollar chart. All right, this is the dollar chart that I've been viewing. Uh, it's all probably is not going to be very clear to you what I'm doing out here, but that let me phrase it out. Uh, Basically, let's see if I can do this. Basically, what I'm trying to show is that uh, there was a move on a daily that basically showed a bull flag. It broke, carried on, started hitting on this trend line, swing, but there was no follow through. There was some FOMC minutes, some bigger news events, but apparently it was not able to take it out. So obviously the next phase was rejection and then follow through retraces, or we call consolidated phase, where the movement is price is correcting on the lower side. So it has fallen back to what was supposed to be a bull flag top. So it's residing underneath. And this is probably where the base is coming in. So hypothetically, the dollar should decline a bit more, right? This is the assumption that you're getting based on these patterns. All right. Now, I don't want to confuse I don't want to confuse people out here, because apparently, I've been working with this thing for a very long time, so I can judge the movement, but I just want to show a little bit of, uh, where you stand with the trend lines or how you fit back into the patterns and, move back. Anyways, going back with the same flow, this is another trend line that's coming in. And this is basically suggesting when the price was hovering below here, whatever it was doing, this is where it actually broke out. and then this is where it starts shaping up. Did a retest almost, and then swing back in again. So pretty much after this retest, that was almost immediately after hitting the initial top of the bullfrog break, it did a retest and then gone back in again. So on the same concept out here, again, it's retesting out here. So basically, even though with a pattern, you would like to sell it at least back to here, and on a broader pattern, it should break even further lower. But I'm not going to go and contemplate on that. I'm just going to go and, try to keep things simple, one step at a time phase, where right now, regardless of what we're seeing on patterns, for that to kick in, you need another test here, which is probably coming in soon enough. You need a failure, and that failure needs to go and drop under. This is where then you become more clear that this move is not done. That means it's going to continue here, probably swing back. Then it needs to break down more. Anyways, that was just a concept of yeah, different views of the same trend lines, how you go and you play along with them, and how you position yourself into the markets. Now, with that done, what I'll do is that I'll let me just take a pair Canadian, and I'll tell you when I come sit around what exactly I do, what I look for, and how I go about doing business. Most of you yesterday were looking into my interest of price action that was on based on an 8 hours. I was looking at a broader structure here, which is nothing more than a series of basing up and decent, very decent pullbacks. So I was, and now here the price was again very close to it. So I thought it needs to come in. So I was ready to take positions out here. I missed it out by about maybe 17, 18 pips. Regardless, we go along with the trading phase where we do not chase the market. If somebody can give me a hands up or thumbs up that you can hear and see my screen, anyone?
Yeah, I can hear and clear.
Okay.
Hear and see.
All right.
Yeah, me too. I can hear you great.
All right. Good. Good.
I'm not butt in. Like I just don't want to.
Yeah. In case of there's a problem, hit me up a message or let me know. So, anyways, this is with the I was going on the same structure. I was going on the same structure that it's a good 8 hours smooth trend line, streamline, right? So it needs to. It's so close that it's almost like a begging a test. But what I did not realize, and I'll discuss this in detail. What I did not realize is that there's some patterns that there's some, there are few techniques on a trend line that I work, and most of you have seen it again and again and again and again. A good example was a dollar yen yesterday of 30 minutes, and this was no different than that. It's just that I was so focused on the 8 hours, I didn't see it coming out here. Anyways, now that I see a strike here, that was a good buy point. Anything around close to 30, 20 was a very good buy point. I could have let go on some pips and, maybe try to take another position down towards 3002 or right around 3000 level and hide my stop under 80. I could have done that, but I didn't see it because I was so focused on the 8 hours that, I didn't realize, I didn't bother looking at it till it was too late. Anyways, if some of you have already had the projection in mind for the dollar yen charts, which I'll discuss again today, then it's the same concept here. I mean, what I'll do is that, let's say if this is a bounce, right? If this is a bounce and this needs to carry on, then where or how far stretch it can go. So one of the things that I do is that I try to figure out, let's say I'm going to kill this guy. What I try to do is that, this makes it easier. What I try to do is that, and most of my charts, what they do is that, first of all, lately, whatever you've been seeing, there are only one or two strategies that I use more profoundly, and this is the one that I share. There are others, there are like 5, 6 different other strategies out there, but then, the one that carries more impact in terms of successful trading and, better entry points, that's the one that I'm using. What I try to do is that every time I try to do is that where the market has broken out, where, okay, from here, the price went down here, swing around, went down here, then came back pretty much mine a new low and then start trying to give a bounce. So overall, if I start looking on a bigger time frame, I'll see a pattern of double bottoms out here, right? So, but what I try to do here is I need to figure out where the break is. So this looks like a break here, in a nutshell, Now what I try to do is I replicate the same thing on an actual trend line. And when I do that, there are norms, there are things that I follow. I'll discuss some of them are here. Why I do that and how I do that. It's simple. It's just a mindset of, all right. So this is probably the trading base right now. That's mean we have a uh, possibility of double bottoms. So if it's double bottom, that's mean next high needs to shoot higher than this. That's mean if it's a true double bottom, it needs to take out this high. Hit here, or carry on. That's a separate thing. But for it to be true, it needs to do that. Take out this high. All right. But before it does that, how would I know that, it's time for me to go and sit on the long side and that, price is actually going out there? So I need to have some kind of a median, some kind of a clue for me to understand that, this is where the price is going in. So what I do is that I look for if the price is shooting from the lower side to the higher side, that means it has to have broken somewhere from higher to the lower side. So this is what I'm trying to dig in. So this is, in a nutshell, this is what I get. So basically, if this is a true move, the target is bare minimum at least till here. Ideal target would be something like this, something like this. But how do we sketch that on trend line? So this is where I come in. Now I've already known the zones that I'm looking for. I'll just try to go and see if I can have some connection on trend lines and can get something good out of it. All right. But mostly what I do is that I actually use actual trend lines. So now if I put this is more like a horizontal, but it's showing me a choppy zone out here. So what I do is that I'll try to correct that. Now this is what I do when I say I've got an unorthodox style, which means I go and I make rules and I apply them. But these are the rules that I've tested. I've seen it so many times, again and again and again and again. So I know on a larger benchmark it works for me. Now this is much more smooth. This is basically how do I sketch this? If you want to know the concept, then you will try to understand the price action in this way. That's mean this is where the price is. This is where the price is actually going around. Here. So from here is basing in. So I'm ignoring this move. I'm ignoring this move right now. I'm completely ignoring this move. The one that it broke under, stayed under for a while before it came in. So on a continuation mode, it is respecting this trend line. Came down here, gone like that, broken down, and here it actually fought. Here it actually fought. And when I say actually fought, that's mean it stayed there for half an hour time frame, so about 2 hours, 2.5 hours. So it was fighting out here before it broke under. It broke under again. I'm not going to discuss this. I'm going to use a UD chart to discuss the same thing. So it's coming down here now. My question is that, and the question that we need to ask ourselves is that, is this move under can be boxing? That's mean, can I ignore it? Like the move like this is easy. The only way I can ignore it is that if it hits here, right? If it starts rejecting, I need to go short regardless. I need to go short. If it starts closing on the higher side, wait for any move down there and then start buying. That's mean now I have a move that going on the higher side. So this is basically, this is how I'm going to use this trend line. That's mean I'm basically ignoring this price action. I'm willing to ignore this price action as long as I get it close under. Otherwise, looking at the band, looking at current price action, every time the price comes down here, which is probably about 30, 95, 96, 97, or up to 3100, I'm a willing shorter. I would not care whatever happens. If price comes down here, I'm shorting. First instant, I'm shorting. I'm shorting. Regardless of anything, I'm shorting. I might take in 5 pips, 10 pips, or however it progresses. I keep on going for that. So I'll do that. That impact is that as of right now, there's one broken. It stayed for a little while, and then it broke up. But there was never a momentum. There was never a greater momentum for it to carry on like that, and then probably dropping. It never did that. So here it's been holding on for a while. So every time it comes down here, I'm going to be shorting it. So this is this is one of how do I put it? Yeah, this is my first impact of price comes down towards 30, 94, 95, 96, 97. These are my interest levels to go short on the Canadian dollar. So now let's say I want to go short and I want to stay short. Now why would I be doing that if I do that? All right. Uh, Probably can use that. Yeah. All right. What I'm doing out here is nothing more than when the price hit down here, how and where it started breaking on the higher side. So I'm just using a streamline proportional a trend line here. And the way to look at it is that I mentioned briefly a couple of times that it's all about channels. So if this is one trend line, regardless it's inclining or declining, it's just a trend line. Then this is a trend line. This becomes a channel. So anything, whatever happened within this channel. So indirectly, this is a break above the channel. So that's mean even the break is somewhere around what 30, 50, or 45 zone, right? The retest can be lower because it's declining. It's not the point of level that it broke from, it's the line that counts. So if the line that counts is that, if I get a price here, if I'm shorting it, my ideal target would be a run down here, which is probably again close to the lows. Or if it takes even larger time to come down here, then probably it can actually go deeper, which is fine. As long as I'm not breaking on the higher side, I'm willing to stay short. I'm willing to go and target this trend line. What I'm trying to do is nothing more than hitting one break zone, turn and play for the other break zone. That's it. Nothing more, nothing less. Nothing too complicated. And while doing that, I still, I cannot take this away from my mind. That's mean there's a hypothetical, there is a probability that it might just come and hit down here, and that would be even better long. So if those longs kicks in, then what are my target? I'm progressing, taking one pair, going from short time frame, look for entries. Why am I looking for certain entries? How am I shaping my bigger time frame, matching them out on a lower time frame, and then again going back on a bigger time frame? What I'm trying to do, it's nothing more than trying to read into a price action and trying to put myself into a zone that if so and so happens, what are my high probability clauses? So that's mean if I if we get a shot around 30, 90, 3100, and it start progressing, it can probably generally can come down towards 30, 40. That's about 50 pips. That's not bad at all actually, right? But if the price fails to go and hover and start consolidating like that, it gives you more impression that it's going to go and come down here. But what actually you will do is that if I start looking on 30 minutes, since 30 minutes is declining something in this fashion, apparently it would have been synced in with the same 8 hours. That's mean apparently maybe a day later, maybe 24 hours, 36 hours later, the 8 hours and 30 minutes are all synced in together at the same point, which gives me more impetus. It gives me more confidence that when it comes on here, I'm willing to take it long, and I need to take it on the higher side. So by doing that, what are my targets? So my genuine target would be something, again, it's easy for me to go and start doing all this, what I'm doing right now, because I do it all day long. So it's just, I can break down a whole pair, uh, fresh new pair. I can break it down to the finer points in less than a minute. That's how fast I can do it. Unless there's a heavy consolidation on that pair, that might take me some a bit longer time. But then, you know, the mindset of a trader, the concept of what I'm trying to do or how I'm trying to do, this is this is smaller time frame, bigger time frame, better looking trend lines, better levels into the markets. They all actually they come down and they play into the market. So coming back to the point, if I get alongs here, let's say 29.90, 3,000 zone, next 24 hours, 36 hours, hypothetically speaking, if it comes in, then what am I looking in for targets? I would assume something in this fashion. That would be a move from here towards 3,200. And how do I duplicate that on a trend lines? I'll see if I can take the same thing, mix and match, yeah. So that's been, again, if I look from this impact, this is nothing more than a channel. This is nothing more than a channel. Between here and here is just a channel. It's just a channel. So either we break back or get a failure here and then go back down here and it's going in deeper. Then it's a different story how you go and look for your targets and but the base is you combine different time frames and then uh, look at things and then you go about doing your business. Uh, are you guys with me? Can somebody can prompt me? Okay, all right, fine.
Yes, I'm here. I'm here. I'm here.
All
I'm
right.
here.
I hope I'm not boring and I'm not putting people down to sleep. Uh,
No, no,
after
no, 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 definitely not.
I mean, I want to go and do the same thing because this actually happened yesterday. I shared it. The 30 minutes on the UJ, the same thing. This was my chart that I was actually buying initially based on a 4 hours at 1300, and then we started hitting down here. I came down, I actually mentioned it needs to, because I was looking at Canadian lower, euro higher, pound. I was clueless because of May. She needs to come in and she needs to talk, and so try to stay away from it. Sushi was showing lower. Anyways, so this was the thing that came in that I'm like. This is the chart that I shared in that at that time we were right here on this candle. Basically, we did not break under 130 that time. So this was the impact that hit down here and come back here. This comeback out here, I mean, this move, what I discussed on the 30 minutes on the Canadian is the same thing. That's mean it hit that. It's just that the distance from for the UG from here to here was a minute distance, about roughly about what actually no, actually it's not minute. It's from 70 down to 50. It's about 70 pips, but it was in a hurry. Yeah, so it did it. It's just that the same concept is applied on the Canadian. That's been it has not gone and done that move, but if it goes and hit that 95, 96, 97, wherever the level it comes in, it would have done that. So here, the same impact, it came down here, did not actually test it, but moving back, again, back to the same level. So uh, it's the same concept I'm using. Again, for it to go bullish, it needs to do this. It needs to get a couple of closes, maybe one close on the higher side, swing back, try back here, and that will be the entry point to go in long for this pair. Or a failure here means that, wants to go and probably try it deeper. As of right now, again, if you look at it on a bigger time frame, we'll get uh, another aspect of double bottoms. But here's the tricky part. Now, if this comes into play, now if this price comes into play, this trend line is already done, and it's going in deeper and deeper and deeper and deeper. I don't think so. The price will come down towards it, so I can actually take it out because I'm not going to use it again. Now, probably I'm going to go with this mode. That's mean now if the next strike is coming in, it needs to come in on this because this now is gone very deeper. That will require big, huge movements, which I don't think so. So If there's another strike coming in, it'll be somewhere in this fashion. Yeah, that's mean the next series of low, if it basically, I mean, failing here, this is your next move. That's mean it's just gonna be hitting minor new lows. So it's not gonna be doing too much. So, and if I look from a broader spectrum, this will start looking more bullish. That's mean the break on the higher side is it's more likely, you know. So again, if I'm buying, just like the Canadian, it's almost replica here. This is where the break point is. That's mean if I'm buying into it, right? If I get a good shots here, if somebody's taking a good shots out here, this would be target somewhere around 112s, 55s, or wherever it comes in by the time it can be 1 hour or it can be 5, 6 hours. So the longer it takes, the level actually sinks in. So apparently it's not the level that counts as a trend line, and the time that it comes and strike it counts. So that would be the second long. And buying along from here or getting along from here is in anticipation that it's going to break out and go on the higher side. So the same thing, if it does that, what would be the targets on the higher side? So it's again, it's back down to the basic again, somewhere around this region, or actually somewhere around here. Yeah, yeah. This is the same thing that has been. This is the same thing that is on the 30 minute. There's no different. It's just that this zone is the same thing on the 2 hours. It actually matches up. So this is again, 55, whatever the level is, I would say about, yeah, 50, 51, 30 minutes is there talking about 53. So anyways, if it breaks down, then, another way that I do is, how do I calculate basically my targets are based on the channel. So if this is to be broken on the higher side, then, what is the next expected move? What I do is that I copy the same trend line and I just, see if it's giving me an good zone that again tells me something about the breakout, showing me some breakout. So this is what I like. Even though it's a horizontal, I like this phase. So, my mindset is set, if it starts breaking on the higher side, the next move is somewhere around 114.20. And if I put it down on a broader pattern, considering it swings in like this somewhere around here and then start bouncing, start breaking on the higher side, it hits down here, then probably and most likely it will go and start hitting on the higher side. I don't want to discuss, too much into the broader pattern, how do you make use of them, but then, just hindsight on how you get things done. Another way would be like this. So here, it's just that it's a more of a symmetrical triangle that broke under and is trying under, so the break would be, actually I would go with that in case if it's breaking on the higher side. A good target for the longs would be about 114 and a change, 104.0, actually, let's see if it happens, yeah, right around 114, yeah, level, that would be a good target. So there's some move that can be caught up out here, but initially, uh, just like the Canadian, just like the Canadian, it would not hurt to see it test down here, start flirting, start holding, then, sorry, it's like, this. Get a test here, if it, considering it's not breaking on the higher side, starts shooting on the lower side here, or starts flirting here, that's, yeah, start moving back, then these are your better buy, these are better buy points, It comes down touching 75 or 60, it depends, how soon or how soon, sorry, how soon or how late. The sooner it comes, the level will be higher. The later it comes, the level will be deeper. Then you got more chances of it actually breaking on the higher side and then carry out towards 140. Yeah, that could be a trade setup out here right now. six between 70 and 80, taking a move for the long side. So this is basically what I'm trying to say, or what I'm trying to do is that it's simple. Trend line actually here I should, because I should just go hit it like, yeah. It's simple. It just tells you basically what Trendline does is that it does nothing but then telling you a story, and it's a story of a price action. It just tells you that I need not to enter into the markets here. Though I have interest, but this is not the spot. This is not the time. I can start taking shots here, but I'm also, I'm skeptical. What if it does not swing and it's in a hurry to go and break on the higher side? So if I take an entry here, I've got a 15, 16 points on a stop loss on a pair like that, on a move like that. I'm happy with 15, 16 pips per shot. But start taking down here means if it comes down here, that's a prime level. I need to take another one here. So I'm basically bloating myself on a position that actually came down to the point where it needs to be entered, but I've entered earlier also. What if it just starts breaking on the higher side? It's going to be a double whammy. So I lose a lot of trades by a few pips here and there, but the whole concept is that I don't go chasing the market. So if I'm a buyer, this is what I'm looking. If I'm a seller, this is what I'm looking. The next move for me would be that close to that 140 level, right? So that's mean if I can, if it breaks on the higher side, if I can manage a buy, then that would be my target. And simultaneously, on the lower side, I can get a shots here. I can swing. I can try to go and swing down here. Start pushing back here. I can go back again. No, that's a different story. That's more, you know, more into sketching into uh, putting down your trading strategy. But this is what I do, basically. This is what I do. There are other strategies. I don't have enough time to go and discuss on that, but this is something which is very strong. It brings in, it reins in most of the piss for me. So this is what I like. Uh, let's say we did a dollar yen. I don't mind doing euro Japanese. Yeah, well, again, euro Japanese on a 30 minutes is this is no this is where it becomes difficult to go and chart. This is consolidation. I've got one trend line is already coming. That's a swing. I would probably use it for scalps, but the mentality, the concept is exactly the same. There is no difference between this and that, this and that. That's mean start basing like that. Excuse me. But if I use the same trend line to see that if I want to go and do a channel, it's just that it's choppy, choppy, choppy. It actually comes somewhere around here, quite low. This is one of those trades where you go long on a break on the higher side or how it tests out here, you stay short. But your bare minimum target would not still not be there, because it's choppy. You will be looking to go and take quick gains, because I would do that because there's a continuation of back and forth, and it's just plain simple choppy. So maybe I can go and use this. Yeah, actually, it is congested big time. It's already done it on the same thing, broken hit. So I think my guess is that it's more likely to go and hit on the higher side. If I can grab that on the 2 hours, yeah. All right, so basically, yeah, yeah, yeah. One can go and take some. This becomes easier with the flow. So this is more like where it comes down on a broader spectrum. on a broader spectrum, the market is playing on the lower side. That's mean, as of right now, every move on the higher side is likely to get shorted out. It's likely to get shorted out because I'm looking at a fresh break. So this is a fresh break. Has been a retest. It's coming down here. So either if it fails here, otherwise it can do a move towards 121, 45, 46, 47, starts holding. That looks like a better shot for a continuation on the lower side. And the whole concept is simple. It's just that it's on a very fresh breakout after this consolidation here, and it's just that it's consolidating. So on the same spectrum, the lower target would come down something like this. So yeah, I don't mind buying on the break here, or maybe even try to anticipate a break. I mean, buy from 80s, carry down towards 45, around that level, starts holding, going for a shot. So 30 minutes is choppy on this, but 2 hours shows a better angle. So right now, I break on the higher side would not, won't be a bad deal. So initially, probably these looks like base out, so might get a swing from 80s or around on the higher side, but down from here, minimum sell back to retest, starts breaking under. These are better shots, better shots. It target easily new lows. And how does it look on yeah, on 8 hours? Um, on 8 hours, different thing is turning out bullish, which is the same thing that this is the same thing that I've been following on the UJ, on the Canadian, and it's done it out here. I just missed it. There's so many things that you can do in a day. Anyways, uh, that zone again looks like it's going to come in at 45.50, and there are some shorts out there initially from there. 8 hours, triple bottoms. I will start looking now on the higher side actually. That's mean this looks more appealing now. Yeah. So based on 8 hours, as of right now, yeah. I mean, I'm not gonna go. I'll more neutral, but then initially somewhere around here, 45, 50, their shots are here initially. So that's the Euro Japanese. Uh, NZD. NZD in 2 hours again. The way we look at it, where the break is. So this basically symmetrical wedge, it broke on the higher side, flirting up. Still, there should be a retest, but I think, yeah, well, makes it easier. So new high, anything into 72.30s, well, I'm a willing seller on the NZD. And it's more like this. I would not mind a swing on the higher side here and start selling it for targets down here. That should come somewhere around, actually, yeah. So basically, yeah, this is not too many pips, not too much into a pip count, and it's a very slower pair. I think this is a move, hit back on a new high, 30, whatever, 30s into some mid 30s. From here, expect to move back here towards 71, 80, around that vicinity. So and from here, yeah, we should get a swing. Anyways, there's about 45, 50 odd pips that can be taken on this pair. Good shots are uh, anything higher than the new high, but a good thing would be a retest out here, probably 30s. Into my assumption is that 70 to 30 would be a good resistance point for the day. and a good retrace, I mean, a good retrace would be around somewhere around 71, 75, 71.80, that zone. So about 50 odd pips, I would say. And how does this pair look on 8 hours? Yeah, almost the same. What it has done on the 8 hour, these are my old trend lines. On a bigger, for the move to remain bullish, it can go all the way to 7,300. But as of right now, I want to go and see if it goes and hit a new high, will it will it be rejecting? So here, if it swings back, that's mean then we surely going for that. Otherwise, these becomes very heavy shots, very heavy shots. There is no, I don't have any uh, confusion about it. If it moves back, let's say if it moves back into 71.80, I would assume big selling out on this pair all the way back towards 6,600. Median points would be somewhere around here. 70s, get some swings, break, and then carry on. Because this is where that big break came in. So when this thing is decided to falter, this is where it needs to come back in again. So yeah, this is an interesting period, just that it moves too slow. Time is money, and then we're mainly, past few days, we're not trying to do too many into the pound crosses because it's gotten very volatile because of the newses. But yeah, this is a good directional pair. Uh, guys, can you hear me? If somebody can prompt me? All right, good. Uh, so I want to quickly, yeah, I'm not gonna forget the euro because I know most of the guys they like euro, and me personally, I do not like euro at all. I try to stay away from this pair as much as possible. I shared in this chart yesterday. Again, it's just a concept. PM, now that you know what I do and how I do, when I shared this in, I had nothing more than this is what I was looking at basically. You know, I was not doing anything beside projecting it down from one channel to another channel. And how this works is that, it's a very old trend line, so I must have got this initial trend line earlier and I just matched it with the one on the lower side. And then there was, the gap, it just lined up on it nicely. And here it's like fake out, and then carry back. Again, anyways, we're coming down to the main point again. It's like what happens is that uh, we actually got two trend lines that coming in that made it, that's what I said, 107.20 extended, but a good resistance. And that was basically, I was looking at the channel top. So uh, this can get really tricky. This is where I seen most of the people get suckered in. If they have got this kind of trend line, they might see a break and then they just go by. But what they fail to realize is that there's an extended road coming on the top, and it just goes and hit like a brick wall, and then next thing you know, it's just falling back in again. But good move would be if it breaks on the higher side, come down and starts holding somewhere around here, and then start pushing back on the higher side. Then I would assume it's got another next target would be around 1820, 18 something. Sorry, 108, 108.20, 108.30. I was looking at it yesterday to see if I have it. Yeah, I was looking at these areas, and then this is a this is again, would I see big breakouts or longer term projection that needs to come in, then I just save them. Basically, in this chart, it would be these two trend lines. So whenever you see my charts and you see something in black, that's been emphasized as the most important trend line that I'm looking at. Again, these are bigger projection. It takes a pair like you, it can take forever. So this is where the big break is. This is where it was a retest. So I think if we break above current highs, yeah, if it's keep the momentum, then we can probably go 1 or 220, 1 or 230. That's mean again, I'm not doing anything. I'm not measuring my targets with anything else. I'm not looking for plain simple supports or plain simple resistance. I just gun it from breakouts to breakouts, from breakouts to breakouts. So again, this would be my point of interest. On an intraday level, you might get some levels like 107.40 probably would be there, 107.75, 80 or 90s will be there. I'm not debating they are not. I'm not debating about that. But I'm just looking that, this is to me, what I found out is that, it's like a magnet. It's like a magnet. If the price is close to this thing, it's just that the magnet is, it's pulling and the gravity is working out here. If the price is somewhere around here, then it's more likely to go and test it than fail it, right? So if I've seen this again and again and again and again and it happens, so why would I want to go and, I can short it here. I mean, it's not that I cannot, there might be some good levels out here, but apparently it just comes in. It just comes in. It just comes in. So coming down here means I'm just looking for a swing, or I'm just looking for, uh, you know, just for the heck of it, maybe 10 pips, 15 pips, 20 pips. Because yeah, one more thing is that, when we go into the markets, I mean, we go in too many different pairs. Days we can have like 8, 9 different pairs going in at the same time or during the whole day. So it's not about me trying to be a Superman and trying to go and catch big moves here and there. We normally devise ourselves in such a way that you got one limit which is relatively close by. That's been, at least get yourself 15, 20, 25, 30 pips. And your second target is the intraday projection, whatever that might come in. It could be another 60 pips, another 100 pips. So that's the way we work in. And uh, one of the things is that I do want to discuss is that, we being a human, uh, we cannot go and utilize our full potential because we got a human factor embedded in us, which is basically we are emotionally attached to our traits, whether we say we are not or we don't like it or try not to do it. One way or another, we do get attached with our trait. And there was a time when I was trading only maybe 1 or 2 pairs, and I'll try to be a Superman. That bare minimum pips I need to take out is about 40 or 50 pips. Otherwise, it's not a trade for me. And I'll look for 100, 200, 300 pips move. I would get it also. It's not that I don't, but it's very painful. It's very painful. And if I do a maths, if I stretch myself into different class assets and go with swings, take 10, take 15, take 30, take 50, take 100, basically whatever the market's trying to give you, take it. When there's a momentum, go for it. Go do a better run. I mean, there's a reason where you even throw in our entries into FOMC, into NFP. There's a way to do it, but then there's it's still, we don't do it blindly. But my concept is that working with the trend line gives me, and this chart gives me a lot of strength because I can save almost 200 layouts. So the pairs that I do again and again, then bigger time frames are already normally saved out, so it's easy for me to just go scan through something is at a good point and start sketching it out on a short time frame, see if I've got an entry, and then mark it down and then just throw it out into the markets. That's the way it works, and then I might get hit on one pair, I might get hit on two pair. It does not matter to me at all. It does not it does not even raise an eyebrow because I know my stops are. Second thing is that I don't work with level stop. My every stop losses are, I would say, even for a pair like pound NCD and pound JPY, uh, these pairs, if I want to come down, curve it down into an average median, then probably my stop losses are about, I would say, 25 on an average. So it really does not matter. And second thing is that we hardly go around chasing the market. When I say hardly, that's mean if I go and chasing the same pair after being stop out, it's very rare. It's just that if I have a strong conviction that I've just been fooled out by a fake move and the real move is going to come in, I might go back in again. Otherwise, that's the leverage that you have. That's the flexibility you have that, if you can scan multiple pairs, then, and you have interest rating on them, then it's not about one pair. It's not about being Superman. It's a cumulative of all the effort that comes and grind into what you get it out as a reward. So I mean, you probably seen me going crying about Euro Canadian, but you know, this was the entry that I missed yesterday. This was the entry that I missed the day before yesterday, and this sucker has been hitting targets again and again. But I'm so disgusted that I'm not even looking at it today because 2 days in a row and these were like decent moves. These were like they were not. They never turned back. I mean, 1 pip out here, 3 pips out here. I try to be, curb my enthusiasm out here. Instead of placing 12, 39.10, I actually placed in 39.12, 39.30. Still I missed it. So yeah, I was very pissed on this pair. I mean, it's been like tough luck. A couple of days I've been trying to get it, but then every time I miss it. Uh, Pound, yeah, pound is tricky, but pound, pound, this is what I shared in yesterday. This is what I shared in yesterday, but on the backside, this is what I was looking at. No, I did not trade it. It's just that, frankly, I've been getting hit on this pair, and so I'm trying to stay away. With the news factor in, I like to stay in, but I am sensing the top is coming down into play here. Uh, let's see for the day. All right, this. Yeah, so that's been one way or another somehow. And there's a news on the pound also, Clement Cowan and few other important. So I think 22.60 can get a play out. So I'm not trading this pair, but think the way it is. I haven't looked it, but I can, you can just sense it. There's a break here. There has to be a break here. This is some break, so I'm assuming this could be one play, and it probably is swing back. Retest that, then either it continues or like the dollar, it can go back. I mean, dynamics and fundamentals are still not very healthy with that. So my guess, my very highly guess is that there will be initially some swings, but anything next highs, especially if they stay minor, they're likely to get sold out. So rallies on pound are still to be sold out. It's a different matter if it goes and starts clearing about 24.70, then behold, then this move has done it. This move, I've been watching it since the last month FOMC. This was a target, and then it's like flirting around. This was, you know, this was a huge move yesterday. But I got something on the pound. I'll see if it's triable. Uh, yeah, oh yeah. I wanted to go and sell out here, but that's not happening. So on the news I mean, okay, all right. Let's say I take this out. Yesterday when I was watching that, I was thinking because I had this trend line, so I was thinking this is more of a projection of you know neglect this price. I was looking this more in projection of bull flag. So I was like, but I was looking at the Aussie and he was not agreeing with that. That's mean there was still some more room on the higher side for it to go. And being a bull flag, you should have done this move, but then it's gone under. So that gives you the impression that it's lower. But I was looking at it before I started the webinar, and the thing is that I know there's a news coming in, but hold on. I know there's a news coming in, but I'm sucker for patterns, and this is a good. Basically, this is a good channel. This is a good channel. It came down here and broke, and then it's forming here. So ideally, we should have got the. So we missed the shot actually, right? So because we were waiting from here around 88, 90, we missed it. Uh, was to take at least till down here. From here, if it starts bouncing, then there's a buy. That's a buy. That's another buy. So, but let's see how it goes on the. That would be somewhere around 62.70 zone. That's pretty much a support out there on the pound Aussie. Uh, on the 2 hours, 60, 62, 66. So yeah, around 62, 60, 62, 70. That would be, that still looks like a very good tempting buy point. Yeah, this is where we wanted to go and try sell and hide the stop over 6,400. It didn't happen apparently. I was just looking that in case if there's another swing on the pound for after making a low, if it swings back again, then pound Aussie can go somewhere around 65 or somewhere around here. So that could be still a good trade. Uh, that could still be a good trade. I would like hit down here, start crossing over. Then we should get somewhere around here. This is just a hypothetical. I still need to work on that, but. Yeah, this is pretty much what trend lines are, how you work. One more thing, let's say, another thing is that I only do it when, I'm really bored and thing like that. I go on a 5 minute bars. I mean, that's me scalping, but scalping means taking bigger lot sizes and that's, uh, taking 5 pips, 6 pips. Again, I do the same concept. There's nothing different about, whether it's been a 5 minutes, it's been a 30 minutes, or it's been a half an hour. It's same. This is how I would have been scalping it. This is how I would have been scalping it. Buy, buy, stop, reverse, downside, downside, one side market moving. That's mean 45, 44, next buy. Just be a machine and just outside go buying. I can do that, but this is very, very exhausting. This is very tiring. This is uh, when you're bored and nothing much is going on, then it's good. Otherwise, I try to refrain from them. But this is very addictive also. But people who are doing it, I know David and I know Ed, I know a few other people out here, and this is what they do. They throw in a big chunk of volume. They hit these finer points. They have their own methods, but what they do is that they take it. I mean, they're not. My point being, it's not for everyone, and the reason it's not for everyone is that because most of the people, most of the traders, they give it into the greed. I mean, you have to be highly, highly, highly disciplined. You need to respect the market. You need to tell this market that this is the market and you gotta respect it. I mean, this is a beast of a market. You respect it, it'll respect you back. By that I mean you take in whatever has been offered. You try not to be a Superman. That's the only way. But most of the people are saying that the greed factor kicks in. You know, when they need to stop themselves out, they're not doing it. So instead of going and losing maybe 5 or 7 pips and take 5 or 7 pips, next thing they know, it's gone into a full-blown trade. They're sitting in 40 or 50 or 60 pips on a stop loss, and these are higher volume lots than they would have normally taken. So they forget the whole concept of what they were trying to do and fall into garbage basically, and they just end up hurting themselves. So, but yeah, this is, you can do this, put the charts on a multiple screen, 5, 6 different screen, different pairs, 5 minutes, 15 minutes lined up. You can do this. You can nibble out. You can do it all day long. You can do it all day long. But it is very tiring. It is very tiring. Very tiring. But still, at times when we got nothing moving, nothing coming in, or missing a few entries, that's what we do. We lined up one or two pairs, like we did on the UJ yesterday. We go like 5 times or 6 times on the leverage, though we do not use. We basically stay under leverage, but at time like this, we go and we take some big moves. We try to take in about 5, 8, 10, 12, maximum 15 points, as long as it's been coming in smoothly, it works out. It's just that in the end, time is money and money is time. So make the best out of it. Anyone got any question? I know you guys will be trading. Anybody got any question? Or show to how do you place your trade once you are very close to a trend line? Seb, I don't place my trade very close to trend lines. I've already done my work, so that's mean I've already have this thing I missed out on the dollar Canadian. I already have an orders sell 30.95 on the Canadian. I missed it. Missed it means I missed it. Now I should be going and putting down. I think uh, 30 minutes. This is what we were doing. That's mean 90% of our work is pre-orders. That's been ordered into writing into the markets. We do not. We do not take positions on a go. That's mean I've got interest to go and buy this 30, 35, or whenever it comes down hitting this trend line. So as soon as I get over, what we do is that we in the habit of placing down orders. We do not that's the beauty, that's actually the beauty of working with so many peers that you don't fall victim to one. So it's, if this thing wants to rough me up, maximum it can rough me up is like 15 pips, 17 pips, not more than that, because this is not the only trade that's going to be on the active. There are more trades. It's just I was really hoping this thing goes and kicks in 95, and then now if it comes back here, that's mean that was the whole idea. As I discussed on the hold on. As I discussed earlier, this was the whole idea of this trade, where we were. This was the whole idea. This is exactly what I was discussing earlier. Just like the UJ from here, hit down here, we would have been shot and we would have been tangling. We would have been like a rabbit dangling on a carrot. We would have been dangling on this thing for a move down here, and then get back longs in anticipation that it's going to break on the higher side. So that was the idea. I just missed mine. Now if it comes down here, it just becomes, it's like you can still go short. Probably maybe good for scalps then, because the move has already happened. It hits down here and start moving on the higher side. That's when the actual move has already happened. So I won't get the whole pie. I might just get the crust out of it. So I just need to nibble into whatever I can, or I can go and look for buys around here and see if it can break on the higher side. So yeah, that's what to be done. But yeah, 90% is orders into the markets. Do not what do you call it? I do not go in on the go. It's really on the go. Like I was really hoping for gold to come in yesterday, and uh, I'm still hoping. See, that's is direction is not a difficult thing. Direction, you get it. When you're working yourself with some tighter stop losses, that's mean it's not about it's never about the entries. It's always about the stop losses. So my entries are not based on what I'm looking at. My entries are based on my stop losses. So if I take a shot here, my stop losses will go exponentially on the higher side, or I can wait for the price to come down here and then go in. So what I'm letting go is that what all the noise that is going to make out here, I'm letting it go. It might go and start dropping and start coming down here for all I know. I'll miss a huge juicy move, but then being safe is and trade safely and more into a method that is winning you again and again. You stick to the winning formula. That's it. And I've got immense interest on S&P also. Buys because yeah, this is what I shared in. I was looking in for this same thing here. You know, on a broader spectrum here. I was looking here. Basically, your head, your left zone, your right zone, your neckline. So we bought it here. We bought yesterday. I don't know if I want to buy it today, but this trend line is coming in nicely. So there's a move here, but this pair S&P has been showing again and again, again and again, inverse head and shoulder, even on 8 hours, massive on dailies, on weeklies. But for some reason, it's not been able to take it out. So if history is repeating itself, the next meltdown is down here. But the goofy thing is about this pair is that every time it falls down, it gives you the impression that crashes now. It just goes and gets you a new high. So, all that I know, I put it on one side. I just go with what history keeps on repeating itself. So money is into it, is into repetition move. It's just that how you catch them. So how I catch them is on the trend line. How I do it, I've just displayed it. I know it's not enough, but then going and discussing few pairs and discussing how I do. I tried to come up with the best way possible that is understandable. At the same time, we can go and discuss few market points. But the concept is it's how you can point yourself to some good trading points into the market where even if you're wrong, then you do not give too much. But if you're right, you take in the juice, you take in the meat. Any question before I wrap it up? Thank you, Jennifer. Thank you, David. Whatever you seen here, this is all I use. I do not use fib. I do not use pivots. I do not use any indicators. If I use them, I'll be useless. This is how I'm going to put it. I tried it, but it does not work for me. So what I see is what I do. What I don't see, I don't do it. Averages to me is like they are following the price action, right? So trend lines is projecting the price action. So I stick to the leading indicator, and it becomes easier once you know how to make them work. And if you can start being disciplined and how you can start waiting for your entries and your setups and how you line things up, then on a broader spectrum, it becomes a walk in the park. It's easier for me to say because I've been doing it for a very long time, but then I don't want to give in the wrong impression. It's not easy. It might just look very plain simple, but the time, the hours, the sacrifices, the 18 hours a day stretch for 6 months, 9 months, only I know about that. So uh, now, yeah, I can just sit and it's like a doctor. I can just take my scalpel and I can dissect the whole pair into anything I want. But there was a time when it was not not it was I learned my lesson after losing substantial amount of money because I thought I was a Superman, but then the reality is different. It takes man hour. Takes dedication. It takes effort. It takes you always being on your edge and always stay modest. My only advice would be, regardless of however you go and do, if you're modest in your approach, you're never gonna fail. Be modest and it's always the good. The good drivers are the one that go into an accident, but then what they do is that they recoup. They don't give up. And I think I'm gonna wrap it up. Thank you, everybody. I hope it was pleasant. Do let me know on your. Uh,
Yeah, I'd just like to say thank you for the efforts, like for the group, and we definitely owe you. So I just like to say a massive thank you, and
Thank
you
you.
know, I
Yes, that was then fantastic.
All right. Just leave your comments out there, and probably I'll do it again next time. But thank you, everybody. I need to get going. I'll see you later then. Take care. I hope somebody has recorded it. I'll see, the recording is there, but then in case, if it's not, then, somebody else has recorded it, then, probably can share it. All right then. Thank you, everybody.